So, Wall Street hit the brakes on Wednesday, and it looks like investors are finally catching their breath after that wild run we've had lately. Hey everyone, it's Thursday morning, October 23rd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. The Dow slipped about 0.7%, the Standard & Poor's 500 dropped around 0.5%, and the Nasdaq, that one took the biggest hit, down roughly 1%. Now, gold tried to claw its way back after that massive collapse on Tuesday, its worst drop in over 10 years. But Bitcoin, that one tumbled below $110,000. Talk about losing momentum. The story of the day, though, was really about earnings. Tesla reported after the bell, posting revenue of $28.1 billion for the third quarter, up 12% year over year and above forecasts. Shares still slipped a bit after hours, but nothing dramatic. Meanwhile, Netflix took a heavy hit, down about 10% after missing earnings expectations, with experts pointing to a tax issue in Brazil. Mattel was also in the red after weaker North American sales. On the political front, the trade war narrative keeps shifting. President Trump hinted at new restrictions on U.S. software exports to China, while reports say the U.S. and India are nearing a deal to lower tariffs on Indian goods, from 50% all the way down to 15%. And remember, we're still flying blind when it comes to data because of the federal shutdown. The Consumer Price Index report is now expected Friday, and that'll be a key one for the Federal Reserve's meeting next week, where markets are betting on a 25 basis point rate cut. So, a mixed day overall. Earnings surprises, trade tensions, and that cautious feeling across markets. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.